Good morning, everybody. It's Friday, August 30th, 5:27 a.m. Central Time. Row crops higher this morning. Wheat is a little bit lower. Brian Split is here. Guys, let's start off with yesterday's price action in the corn and soybean markets.
So, corn, soybean, and wheat futures closed higher on Thursday. The fact that the pop in prices occurred after September basis contracts had been priced or rolled is probably no coincidence. Farmer selling is likely to be reduced drastically until harvest. USDA reported strong export sales for wheat, new crop corn, and new crop soybeans early in the day, an additional friendly factor. Private groups estimate that fund traders were net buyers of 10,000 contracts of corn, 10,000 contracts of soybeans, and 3,000 contracts of SRW wheat.
Look at November soybeans this morning, Brian. Above $10, above some long-term trend resistance. Is it a breakout or a fake out?
You know what? We don't know yet. And I hate to be vague like that, but we did have that move in July, which was July 5th through July 18th. And then when we bounced, we recovered about a 50% retracement of that. And it fell just about a dime shy of those early July lows, right? So that's kind of about where we are. We had that break from August 5th to the 16th, and we've retraced about half of it, and we've fallen about a dime shy of those early August lows that we broke through. So the pattern is similar to what we've done previously on recoveries, although we have taken out this line. I think, here, it's very early in the day. We're above the line right now. Are we above the line at the close is question number one. And what do we do when we come out of Labor Day weekend is question number two.
So the corn market, D's corn, is right up against my version of this trend line. Yours might be similar-ish, but this area here, at 397, 398, up to $4, it's kind of like a psychological resistance area, I think.
I will tell you that from the September standpoint, being the lead contract, and it is in delivery, but there's a price we want to be aware of there, and that would be if we were to close above 378.5 on the September. That would give us a weekly reversal, right? So we made a new low for the move, and then that would be a close above the previous week's high. On the December contract, that would be 401. So if the market closes above 401 today in December corn, you're going to have a weekly reversal there. And I think that would be something to get the market a little bit excited. And frankly, for me, I'm probably going to turn into a buyer of dips. I've got all my puts rolled down, so I might start buying against the puts if we do have that reversal.
No trade wrecks here, guys. Hey, how much of this little pop has to do with first notice day? Well, is today, but all the basis contracts have been priced or rolled. It kind of takes a lid off of price action a little bit.
Correct, right. So any of the selling that has to be done, right? So your merchandiser calls you, hey, you got a price to roll it by the end of the day. That's all done. And we've seen this numerous times. Like we saw it when we got into first notice day. That's actually what put in the low back in February. It was in the March contracts, hit their delivery period. We got past first notice day, and then we started to recover, and that ended up being the that low for late winter, and then we recovered into spring. So finding a bounce after first notice day is a very common effect. Is it the bounce? Was that the low? And we don't know that yet.
Okay, so how soon does the farmer come in and sell this thing? Because everything that I've been told about new crop corn and soybean marketing would lead me to believe that the farmer is drastically undersold.
Right, and I agree with that. I think that if we were to see levels
these prices aren't attractive.
They're not attractive, no. But I tell you
all.
what, if we did see a bounce for some reason back up to where we were in late July, up around that 424 area, where producers can secure some $4 cash, I think you're going to start to see a layer of producer selling come in on a bounce like that if we get it. But for the time being, there may not be a whole lot of anxious producer selling here for a little while.
I would agree. I think you got a window here of a few weeks, like between first notice day and say the gut slot of Midwest harvest, where farmer selling could ease just a little bit. We had some good export sales yesterday, or better.
New crop U.S. corn and soybean export commitments were strong last week. Net corn sales exceeded pre-report expectations at 59 million bushels and were up 16% compared to the previous week. Mexico was the largest corn buyer for the week. China has yet to purchase a single bushel of U.S. corn for new crop delivery. Net soybean sales also exceeded expectations at 96 million bushels and were up 56% versus last week. China was the largest soybean buyer. Net wheat sales were reported at 20 million bushels. The print was up 8% from the previous week and up 53% from the prior 4-week average. The Philippines were the largest wheat buyer for the week.
I want to jump back to old crop real quick. So old crop sales were not good. They're not supposed to be good. The way that it looks for the old crop marketing year, corn exports or sales are going to be about the midpoint of what we've seen the last 10 years. Soybean sales in all likelihood will go down as being the worst of the last 10 years for the old crop marketing year. So there's still a lot to be desired on the export front. The soybean program just wasn't very good. Corn commitments for new crop are like kind of middle of the road here. Soybeans are probably the problem, but you know what? That was a better print last week, and I'm hearing some chatter that China is interested.
Yeah, so there's been kind of like, where are we versus where we need to be to hit the USDA goal? Where are we versus previous years? But I tell you what, these last 4 weeks of sales have been rather tremendous.
Yeah.
The 5-year average for the last 4 weeks is 5.25 million tons of sales of soybeans, and we did about 6.6, so about 1.4 million tons more just in the last 4 weeks than we typically would. So while we are still running behind a lot of these different years and behind the pace we need to be, we've taken a big chunk out of that difference over the last 4 weeks. And really specifically, this week of sales that we got, this 2.6 this week, was the best week in history for this particular week.
Okay, so this leads me think fast forward 5 months. Brazil crop is in good shape. How much of this is canceled?
I don't know, because I mean there's a balancing act, right? I mean they're going to buy, and they're. I don't know that they'll need to cancel.
No.
They're going to be buying for a particular window. There's a window where they're going to need U.S. soybeans, and they're going to come to the U.S. for those beans, and they're going to fill that window up until the Brazilian harvest comes. So they may not need to cancel any.
I agree. I had to ask the question because I feel like people were going to comment on that and be like, oh, they're just going to cancel them. But they are going to, China is going to import some U.S. soybeans.
They need beans, right? Yeah. So if they overbuy, if that Brazilian crop is really big and bigger than kind of trend expectations, then maybe. But I can't talk about them canceling beans as soon as they're buying them.
No. I'm trying to fast forward and like think, what are people going to write in the comments once they watch this? And someone's going to write that. Oh, they're just going to cancel them. All right. What else we got here?
Earlier this month, Egypt attempted to purchase an enormous amount of wheat to offset supply concerns. The country initiated its largest wheat tender on record, 3.8 million metric tons. The tender was nearly 20 times its usual size and worth about $850 million. Reuters reported that the food security concerns were sparked by an intelligence briefing provided to the country's president. The briefing reportedly highlighted supply risks associated with tensions in the Middle East and also in the Black Sea. The tender proved to be too large, as Egypt was only able to purchase 7% of the sought-after wheat volume. Egypt is still attempting to take advantage of cheap wheat prices through the tender, direct sales, and new import locations.
This is not a new story, but what's new about it is this idea or fact, I guess, that Egyptian intelligence, and I don't know if they're intelligent or not, but they told the president that there's supply risk associated with the Black Sea and with the Middle East. And maybe it just goes back to the fact that they got burned pretty badly with wheat in 2022 when Russia invaded Ukraine. Or maybe they know something that we don't. I don't know. Egypt's the top wheat buyer on the planet, tied with China and Indonesia. They're a big deal. I mean, they know a thing or two about importing wheat. Is there a reason to be concerned about wheat supplies, Brian?
The wheat supplies are there. So, I mean, so what does that mean? They wanted to buy all this wheat. They could only buy 7% of what they wanted to buy.
They wanted to buy a whole bunch of wheat at multi-year lows. I mean, that's smartish, right?
So they could only buy 7% at the price that they wanted. Is that essentially what it boils down to?
There were also issues with freight, like negotiating freight out so long. There were some logistics type things I think that played a role.
So Gosh, beans back below 10. I have these things queued up like, right, we're never going to see $9 beans again. Well, now we're never going to see $10 beans again. We're just waffling back and forth.
Never in your
Yeah,
life.
never ever. Yeah, as far as wheat goes, the wheat's out there. We have the wheat available. It's cheap.
Yeah.
It's, I guess, just a matter of them getting the deal that they're looking for. I will tell you that on the wheat chart also, and this is kind of a common theme, whether we're looking at beans kind of popping through the downtrend, corn getting very close to its downtrend. If you look at wheat, where wheat stopped going up overnight was at its respective downtrend in the Chicago wheat. So there is a very common theme that all three markets are either at or testing these their own independent downtrend lines.
Yeah, for sure. We had an interesting flash sale yesterday.
We did. We had a flash sale of sorghum. U.S. exporters sold 118,000 metric tons of sorghum to China for delivery during the 24-25 marketing year. This is the second flash sale of sorghum to China since the beginning of the year, totaling 244,000 metric tons.
This is only interesting because we reported yesterday that the Chinese government told its buyers to not buy sorghum. And then literally 2 hours after we reported this, flash sale of sorghum to China. So I think I mentioned it in the video yesterday when we ran this story. I was like, this is exactly what China says before they buy a bunch of corn. And it wasn't corn, it was sorghum. But in any case, is what is China doing, Brian? I mean, are they just going to buy soybeans and it's going to be a routine to less than routine program? Or is there some additional demand here for corn and sorghum and other things that we don't know about?
This China, what does China do? They're like, oh, look over here. Right.
Yeah, I know.
That's basically, so they say the stuff out loud and then they come in and buy sorghum. I don't know how much they need to buy, but this is a very atypical purchase. You really don't see this very often. Do we see more of it? I have no idea. But how many times does China say one thing and then do another all the time?
All the time. Okay. What's next?
So USDA released weekly drought monitor data yesterday. Drought-stricken areas across the Corn Belt received minimal rain last week. And because of this, a large portion of the Corn Belt saw drought conditions worsen, including Ohio, Indiana, Iowa, Minnesota, Illinois, Missouri, and Kentucky. Rainfall across the High Plains was also limited last week. Drought conditions worsened in Kansas, Nebraska, South Dakota, and Oklahoma. When we look at the percentage of U.S. areas experiencing drought, corn 8%, soybeans 12%, winter wheat 47%, spring wheat 21%, and cattle country 24%.
There's a lot more yellow in the Midwest, like heart of the Corn Belt, than there was last week. There are some areas in which drought is worse. And you look at like that, say south to south eastern portion of Ohio. I know people there have had some problems. You look at Kansas, places like that, it's been dry. I think this is we do have some rain on the radar this morning. The forecast is dry. I wanted to get to the river. We're going to be down to what we'd call restrictive levels on the Mississippi here at Memphis at the worst time of year possible as we're headed into harvest. It's already had an impact on some of the spreads. You look at like that Septies corn spreads trading record carries. This is, I think, at least part of that.
Yeah, it's hard to distinguish what are the specific things that make the spread go to certain levels. So, for example, like December to March corn last year, okay, as we were going into delivery, went to 27.25 cents. So that's about 9 cents a month. So that's just what the SEP-Ds did. Did it get to like 26.75? I think almost the same value before turning. So we're talking almost about 9 cents a month. That seems to be about max is what we're going to see right now with current interest rates. So this is interesting because at one point you've got really good demand, but now we've got restrictive water levels. And if this is the case, there's two dynamics to that, right? These water levels are low because we haven't gotten rain. So does that affect the crop? But also that is going to make freight more expensive, which a lot of times comes at the expense of futures, right? So if we have a problem moving the product out of the country because of restrictive water levels, that is going to be something that is also going to be keeping a lid on futures values because of those issues of expensive freight, and the futures are going to take a bite out of that.
Yeah, it's going to make export pricing less competitive, and therefore you may see reduced export sales ultimately. We may be jumping to conclusions slightly. These are just projections that the water levels are going to get lower, but we're not seeing the rain in the forecast to really offset much of this. And this is turning into like an annual problem the way that it seems. Last thing you need when you've got these monster crops supposedly is any sort of logistics issue.
It'd be third year in a row, wouldn't it?
Yep.
So, the U.S. economy expanded at a faster pace last quarter than previously reported. GDP expanded at an annual rate of 3% during the second quarter, up from the prior estimate of 2.8%. The stronger pace was attributed to an upward revision in consumer spending, advancing from 2.3% up to 2.9%. The economy is likely to cool for the remainder of the year as high interest rates spread throughout the economy. With that being said, the Fed is expected to cut interest rates next month. The cut may bring some relief to businesses heavily impacted by borrowing costs, such as housing and manufacturing.
Where's the recession, Brian? Why does everybody root for a recession? Seems like everybody wants a recession.
I don't know. Are they rooting for one, or is
Yes.
it like, yeah?
I have a theory and a hot take on it. You want to hear
Okay.
it?
Mackenzie's like, yes, they
I
are.
want to
Okay.
hear this.
Okay. This is my
yeah.
hot take on
What's
why
your hot take?
everybody, and I'm going to parallel it to grain marketing. So people root for a recession, and it's a vocal minority, but they root for a recession because they want validation regarding their own shitty financial situation. And I'm not saying like there's no inflation. There is. It's absolutely impacted the consumer. But I think that the people who are rooting for recession, they want validation of their own shitty financial situation, and it's a vocal minority. The same thing goes for grain marketing when people essentially root for drought and they root for shitty crops and they try to tell you that the crop sucks. They're trying to justify their own crappy grain marketing and have other people be in the same kind of boat as them. They're trying to in both instances that they want validation and justification for their own poor decisions or poor situation. Does that make any sense?
And the misery loves company
Yes,
thought process.
exactly.
Right?
Exactly.
Yeah, I could buy into that. I don't know. I'm not rooting for a recession. I just sometimes
People
question
are.
like how these revisions, right? Like the revisions on the jobs. That was a big revision, and apparently we knew it was coming. But it just makes it hard to trust the government data on all these little economic indicators. Like what is real, what is not. I don't know. But
based on what I see in the like the grain marketing or grain market analyst world, people like always want to be bullish grains and bearish stocks, and in reality, you should actually be the opposite almost all the time. You should almost always be suspect of grain rallies, and you should respect the rallies in the stock market for the most part.
stock market is made to go one way. When you just think about over time, all of the money, I just read that there's a record amount of money in money market accounts right now, or money market funds. And we're talking trillions of dollars that are effectively on the sidelines, and they're waiting for somewhere to go. So that's something I think it was, which bank was it? Wells Fargo might have been, but was saying that if we start raising interest rates, we're going to see the stock market go on a run like we've never seen before. And maybe that's the case. I don't know. But what's the dynamic of that? Is that because interest rates come down, so now this money is earning less in the money market account? I tell you what, if I'm earning a quarter point less in my money market, that's not going to force me to move my money out of that into stocks. But if we start seeing a major trend of going, half point over time, then I think that's going to pull money from the sidelines and put it back into equities pretty aggressively, which is wild because we're very close to all-time highs. But
I think the stock market, and this is my personal thought again, I think the stock market is as much of a currency debasement play as it is an economic play. There's too much damn money out there. And to go back to my previous comment, yes, I understand that the grain markets are very bad right now. I'm not trying to sweep that under the rug. We did a whole video or whole segment the other day about how the Midwest ag economy is in a full-blown recession. I get it. I'm just talking bigger picture here. What did cattle do yesterday?
They were lower. Live cattle were up $1.13 to $1.57 lower. Feeders were down 37 cents to $2.85 lower. After being down for 3 consecutive days, box beef finally had a positive day on Thursday. Choice ended the day at 308.66. That was up $1.37, and Select ended the day at 296.19. That was down $1.44.
Outside markets, U.S. dollars about flat. Stocks are up. Bonds are up just a little bit. Crude oil is close to unchanged, $76 in the October WTI. Have a great long weekend, guys. We're closed on Monday for Labor Day. We'll be back Tuesday. Thanks, Brian.